All right, good morning, everyone. I'd like to begin by acknowledging the Bunurong Bun Wurrung and Wurundjeri Woi Wurrung peoples of the Eastern Kulin Nation, traditional custodians of the land on which we are meeting today, and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islanders here with us today. Intersekt 2022, what a year to be in FinTech. Within the last 12 months, we've seen all-time highs in the markets, then record inflation, rising interest rates, and increased geopolitical conflict. These conditions bring challenges for us all, but also opportunities for new innovation. And I'm so excited to be here in person to hear about some of that innovation that's already happening. To introduce myself quickly, my name's Rachel. I lead strategic partnerships for Superhero. It's a bit of a mouthful. And let me tell you, I do our Zoom webinars, and it's very, very different to presenting in person, but I'm very, very happy to be doing it. So I'll get on to introducing our first panel for today. Kicking us off, we've got a panel all about embedded finance. Joining us for this panel, we have Zoe Cossart from Open Insurance, Ariel Timothy from Ariza, Jacob Parker from Fiscal, and moderating the panel is Nabi Mariam from Cover Hero. And I apologise for all of the names I'm going to get wrong in advance. So welcome to our first panel.
Good morning, everyone. Sorry to keep you guys waiting, but we have got started. Welcome to Intersekt 2022. Embedded finance has been the hot topic for a very long time, with an estimated market value of $138 billion. Embedded technology is not a new concept, it's been around for a while. And in Australia, we've got a number of companies playing in this segment. So today, I'd like to introduce the panel. Ariel Timothy, Chief Strategy Officer from Ariza. Ariza is a provider of end-to-end mission-critical automation software to business customers in regulated industries. I'm sure Ariel will tell you how it all works. Next, we have Zoe from Open Insurance. I'll let Zoe tell you about all of the fancy things that they've been doing in the industry with some big names. Last but not least, we've got Jacob Parker, who's the founder of Fiscal and Open Finance Platform. Let me throw it to Ariel first. Tell us a little bit about the company.
Hi all. So Ariza is a provider of Ariza is a provider of end-to-end software for the credit and debt life cycle. So we do everything from loan origination through to loan administration, hardship recoveries, then into insolvency and creditor services. So we look to service each step of the way with different software solution, primarily focusing on integration of things like open banking data, different data sets, such as even insolvency payment records, bureau data, and also accounting data as well when you're getting into the SME space. So ultimately, what we're looking at doing through our software platforms is delivering automation and systemization into segments and verticals that are being largely paper-driven and to create more efficient outcomes.
Thank you. Zoe.
Hi guys, so I'm from Open Insurance. Our mission is to provide the best insurance experiences at the best price for the world. Our focus is working with our partners, and Nabi mentioned we've been fortunate enough to work with some great partners like Bupa and AHM, who are white label partners, other partners like Telstra, who choose to use our Huddle brand, which is our proprietary direct-to-market brand as well. We don't just offer, though, the technology for the innovative experience. It's also the customer support and teams for the go-to-market, for the customer service, and also the end-to-end lifecycle that those policy holders who we claim to be our customers, whether it be our partners or our direct, we're very much focused on the outcomes for them. Jacob. I know you can. We are also in 3 regions, so we're in Australia, New Zealand, and the UK, and we're excited to hear more about how we can work with our partners.
And we're an open finance API platform that's for banks, fintechs, and other platforms. Our product is really a plug and play developer API. and it provides programmatic access to financial accounts. So predominantly under open banking, being able to access users' banking data. Where we really come in under embedded finance is really as a tool to enable embedders or other platforms to leverage more external data sets on their customers.
Thank you. I love talking about platform ecosystems and financial services sector's value chain, and embedded finance or embedded technology can serve across that value chain. So there's one aspect of it, whether it's customer journey or whether it is back office efficiencies or something that will save the company millions of dollars. But what I would love to talk a little bit more is how that goes into the market and integrating into the ecosystem. What are the possibilities from your perspective, Ariel?
So I think firstly, when you're considering that ecosystem, it's considering that there's a lot of modules that you've got within that space. So if you look at each embedded finance option, it's a module that you're going to deliver through a digital experience. So the products themselves have to be the value add of that process. So what I see, and particularly we see through the UK, is what's that next step in the process. So, for example, embedded finance is often a very transactional process, whether it's facilitating a purchase, whether it's a loan origination piece. But what happens beyond that? So an example of something that we're seeing in the UK is when we're going through and potentially going through a loan application, what happens in a decline? Or does the journey finish at that point? What other value adds can be done within that process? So in that space, we've started to see added benefits like benefit checkers, things like that to assess income, whether we're looking at tax refunds as well, to about sort of creating income opportunities off the same data, all consent driven. But it's about how to actually build beyond what the initial use case with consent, but taking it further than the original, just one-dimensional, here's a transactional outcome.
Is it transferable across jurisdictions, being a UK company coming to Australia?
Yes, yeah, it is. Consent-based is really what that relies upon as well, is because if you've got consent from a consumer to use the data in that manner, and you're open and you're honest and you're upfront about what you're looking to do, and you're adding that value, then consumers do consent to it. And that's our experience again as well, is providing the right information up front and providing what benefits can be driven or what value can be added by that process gets that consent as well.
Excellent. Zoe, Open has done some incredible things in the Australian market and is in New Zealand and in UK. What are some of the challenges that you have faced in implementing these solutions and working with big companies and big brands? I would love for you to dive in and give us a little bit of an insight about how it all works.
Sounds good. And so I think one of the things, kind of picking up on your points there, Ariel, it is very much around that experience and around how you actually facilitate for the customer. So again, be it the partner or our direct, I think looking at the opportunity that stands before us, as you mentioned, Abby, like it's a tenfold industry in terms of the revenue potential from 2020 to 2025. It's a focus. It's something that multiple sectors should be looking at in terms of how they're going to partner to enable this for their organizations and for their businesses and for their customers as well. What does that look like? What does that mean? How can we use first-party data to better that experience? How do we streamline and optimize so that it makes sense for the customer, so that when they're being presented information or offers, that it makes sense, that they understand what they're being offered? And I think to that extent, we also need to ensure there's the right amount of friction. So it's always that balance. You want it to be fast, you want it to be easy, and partners want things delivered fast and in a streamlined fashion. But we also need to make sure that customers are actually very aware of what they're purchasing. For insurance context, when they're covered and when they're not, when they're going about their lives, understanding that this is something that I'm actually covered for when it comes to insurance. So what does that mean to me? What do I need to look for? And empowering that choice, which I think, be it a financial service in direct banking or whether it be in insurance, is something that we're about. We're about the open mentality, but also as the open business, ensuring that customers are able to access the information that makes their choices more informed.
Thank you. Jacob, I want to talk a little bit about your solution and how it interacts. So with open solution, it's very much thinking about the customer journey, and you've got a white label solution and then also your own brand, right? So there's certain limitations around what the customization of it. And then Jacob, with the solution that you guys offer, you don't directly interact with the customer?
Yeah, so we also offer white labeled access to open banking. But I think fundamentally pulling in the data provides a variety of possibilities. I kind of think of embedded finance as a spectrum, and it's not really binary. You could have probably the lowest level, you could have a button where someone initiates a payment, and that's sort of an embedded journey. But as it goes deeper, you can start leveraging both your commercial data sets that you currently have, as well as external data sets, and open banking is a good use case for that. And leveraging that, you can now start to provide more services using open banking. One particularly that I like, and I think it's a quite strong embedded experience, is if there was an accounting platform and I could pull in someone's open banking data, and at the same time I could see their receivables that are coming through. There's a call to action at that point where that vendor might want to receive a working capital loan, and that's quite a short-term duration loan, and they could do that constantly throughout the year at many different times, where it might make sense from a cash flow perspective. So I think for us, it's really, we work with embedders and then also other platforms just to pull that data, and how can you use that data to extend the service as well. Even in the embedded journey, I think you can hyper personalize more of that. So instead of picking the age between 25 to 30, you could start to fine grain that and offer more personalized offering.
Yeah, I might just add to that quickly as well, because that's actually a growth area we're seeing as well in that SME space, which is exactly that use of open banking data, is to facilitate building out the profile of an SME client and then using it as a trigger for cash flow finance. Like it's one of our platforms actually does it. So.
Zoe, I want to go a little bit deeper with your solution, because it's an end-to-end solution that you guys have created, and you work with Telstra. Is a big company, right? So it's one thing to design an amazing, beautiful product from a technology perspective. It's a whole different ball game to implement it and take it to market. Would love for you to share, because you've got Bupa, you've got Telstra, the process that was involved in from getting in contact to taking that product to market, and all of the stuff that we do not see behind the scenes and what it took.
Absolutely. So, not sure if you can all see, but everyone in this front row that is in white jumpers basically make this happen. So we've kind of got a mix here of product and our marketing team, as well as our partnerships and our engineering team. And I think that, it is very much, it is an end-to-end journey from actually putting together the proposition that goes to market, again, via our partners or direct, and working with our partners. Because I think, to your point, Nabi, yes, they are incredibly large organizations that have a lot of governance and structure and are fundamentally good at what they do. But that doesn't necessarily directly translate, at least in an initial period, to being good at selling general insurance or the particular offer that we're presenting through this embedded experience. So how do we lean in and use their base, their infrastructure, whether it be marketing or other, to actually enable that customer understanding of why this particular brand is now offering general insurance? What does that mean? What does it mean for the business? What does it mean in terms of the actual service that they'll experience throughout that purchase and life cycle? So I think, like, in terms of Bupa, it's a great example. We went live with them earlier this year. It was 10 weeks in terms of the actual development through to go live. And that was a whirlwind of a lot of 24 hours, let's put it that way. And there's no chance that was something that was an easy undertaking, and it's something that we would necessarily have the same size opportunity to target something like that again in terms of that time frame. But we have an incredible team, and I think, it speaks a lot to the culture of both organisations when you can find that mix of partnership that actually brings about that drive, determination to bring that customer outcome. We were very fortunate that Bupa were very committed to bringing a different experience to their customer base. We were fortunate enough to win the tender against larger insurers. And I think that for us, the reason that we were communicated as for the decision was around that enabling of that creative, innovative, fast-moving experience. So even in the last period, we've had 6 releases, for example, since we went live, to enhance those pieces. As we learn, we continue to improve and release again, so that we're bettering that experience and really listening to the customer base, given that majority of them are actually health customers that are translating now into general insurance.
One of the most difficult, I guess, pieces of the embedded flow I see is just the customer journey, and maybe people in the room seeing embedded finance, and how do you execute that customer journey? How do you guys, I guess, looking at Bupa and then Telstra, look at maybe tweaking those flows or how executing, because they're quite different use cases and stuff there.
Yeah, it's a really interesting question. And if you want to meet Rahman, our engineering and product experience general manager, he'll be out by the coffee. We've got an open coffee cart. But just in general, you're totally right. And I think that for us, it's working with that partner. We are very fortunate to have live data that we're accessing from day one. So we get a sense of who's actually approaching, who's looking, who's dropping out, when they're returning, those types of experiences. So I think that that's one component once you're live. But in terms of actually developing the solution, it's very much understanding why the customer would want this particular product, what their targets are. Is it actually retention? Is it new business? Is it another revenue stream? Is it actually an opportunity to deliver something differently to make their platform actually more attractive, because that drives retention? So there's a series of reasons why partners would want to work with a general insurer, or whether it be someone that is providing them an additional add-on service. Supplementary services are massive, it's a massive space for opportunity. So I think it's about understanding what you can offer, how you can offer it, and then working very closely with the marketing and other teams to understand the customer base so that you can best serve that experience.
Yeah, in financial services in a heavily regulated space, creating products like this is not easy, right? Because we have to partner with a whole range of players and stakeholders, from regulators to the incumbents, and with open banking, CDR, open insurance being a little bit far away from becoming a reality. As a company and its product teams, even if you can do something technologically, there might be hindrances around regulation and compliance that would not allow you to do it. So how do you determine when to execute on what in terms of getting traction in the market? And I know timing is a really critical factor for success, and globally we're seeing a lot of traction in embedded technology. How do you guys think about designing new products in the space and looking at what's happening with other stakeholders?
So we're largely driven by our clientele. So we number anywhere from banks to non-bank lenders into insolvency practitioners. So we're driven by gap analysis of what's happening within their systems and where we can bridge those gaps. But fundamentally, what we end up doing is working with the regulator. In each jurisdiction that we operate in, we end up having a relationship with the regulator, and we test in their environment and with their engagement. Excuse me. I checked this about 5 times.
You actually did.
I literally checked that 5 times before I hopped on stage, and it's still wrong. But we end up at working with the regulator to determine what fits and how that interacts with the law. And so in the UK, for example, we're regulated by the FCA. In Australia, with our platform, we've got a corporate insolvency platform here. We work with the regulator in the personal space, AFSA, and we work with the ASIC in the corporate space as well, to integrate with them and liaise with them about different things. And we also work with the ATO, because we also do integration around single touch payroll and items like that as well. So we're governed partly by what that regulation is and how the regulators interpret it, and then what our clients need to fill those gaps.
Excellent. I'd like to throw a curveball at the panel around embedded technology, and what is happening in Web3 and blockchain is a big topic at the moment. So when designing products, you can choose to pick a technology to find or create a solution. And both in insurance or banking or lending, there are different ways or different times that we can choose that technology. Where are your companies in terms of adopting blockchain as part of embedded finance or embedded finance solution? Is this something on your radar? Is it something that you guys are working on? What are your thoughts?
I think there's a fascinating element to being able to tap into whether there's deep liquidity pools in DeFi, or kind of being able to disrupt the back end side of financial services. For us, we're really focused on the open banking side, and I do see in the short to medium term a lot more innovation in embedded finance around the use of data. I don't think the run up of embedded finance has even really started yet. I think it's more product innovation rather than leveraging internal data sets. But I do agree with you. I do think there's some interesting kind of external areas for improving operational efficiencies.
Zoe, thoughts on that?
I feel like this is probably one we could throw back at you. Look, I think it's an interesting space. It's definitely something that we are keen to keep our eye on, and to continue to challenge ourselves as business and professionals that are passionate about the way that we deliver products and services, to keep thinking about new and different ways that we can offer that. For us, it's not likely going to be a key focus in the next kind of quarter. And that's how we like to look forward based on the types of partnerships that we work with. But again, it is something interesting, and looking forward to potentially hearing some more about it at a round table soon.
Excellent. There are a number of solutions from Cover Hero's perspective that we have worked on before in the Web3 space and blockchain. Just a lot of R&D work around what's the use case, right? And there are a number of factors around scalability. Does it make financial sense to build it on this particular technology? And does it really solve a problem? And if the problem can be solved without that particular technology, then obviously, we have chosen different paths in the past. But financial inclusion that is created by access to data from the incumbents is huge. Where do you see the industry in 5 to 10 years with the rate of development that's happening from a legal perspective, from the regulators' perspective, incumbents, and their technology providers and startups? Where do you see our industry in about 10 years?
Look, that's a good question. Look, I think there has to be an evolution into how, I guess, traditionally bank products are propagated out through different fintechs, because right now there's this. We've got payment opportunities, we've got the beginnings of open banking data, we've got these sort of engagements, but there's not a lot, and we've got wallets and things like that. But traditional banking services are still held quite tightly. So when we're talking to actual account management, virtual accounts, for example, is quite hard to access for a fintech without building a wallet-style solution. So when you've got to create a virtual account solution in front of a trust account, for example, because of regulatory requirements, that's quite difficult. For a fintech. So I think the evolution is really more about some core banking products getting more accessible to fintech. So in 10 years' time, that's where I'd like to see things, is where a fintech can come in and offer those type of solutions, because they're more nimble. They've got the ability to adapt, and from a financial inclusion, that's how you start to do that, is to make credit more accessible, financial services more accessible. And we do see this in some other markets, for example, even just close to home in Indonesia, where you've got that non-bank sector, and fintechs are really leading the way actually in that inclusive area, particularly around the micro to SME space.
Zoe?
I think it definitely is something that we focus on. As I mentioned before, we're not just open by name accidentally. It's something that we consider in terms of how we can actually enable customers to have access to their data. I think it generates some question too in terms of how does that change the competitive landscape? So once people can actually switch more easily, will we see higher rates of churn? I mean, they're relatively low across the nation at the moment. So what opportunity does that present? And I think for us, it's twofold. One is that we could potentially see more uptake because it's easier to move away from the incumbents. It's easier to be more interested in those other products that sit outside of the core four. But I think also it's important that our customers are enabled to make transitions to whoever they want to be serviced by, and that process is as easy as possible, and when they want to access their data, that they can. So over the next 12 months, our focus and priority is actually enabling customers to be able to retrieve all of the data that we actually pertain to their records. And that's just part of, I guess, making sure that we're being true to who we are as a business and the values that we want to uphold and that we think that are important when we're both looking at what the customer offering is and who we work with.
Jacob?
10 years is tough, but I think in 5 to 10 years, Australia's in a unique position with open finance, moving to open insurance, and more data sets coming along that. I think with regards to embedded technologies, increasingly we'll see moving from white label UI solutions to actually being embedded in the flow and kind of having this dynamic relationship with the customer. And I hope to see open finance when the full flesh rolled out, and finance is happening in the background. I don't think it needs to be in the foreground.
Excellent. Thank you very much. I'd like to see Web 2, Web 3 coming together and being able to embed products inside a virtual reality or an augmented reality environment and, interact with products in that kind of space in the next 5 to 10 years and across, various different channels where financial services products are not distributed, and then how we navigate through a complex regulatory landscape, right? That brings us to the end of the first panel. Thank you very much, panelists, and thank you for your attention.
Thank you.
All right, we're running a little bit behind on time, so if everyone could please take your seats as quickly as you can, and we'll get started on our second panel. All right, so our next panel is all about beautiful data and how data can solve problems for small businesses. Moderating our next panel, we have Kathy Lyle from Wiser. And Kathy, I'll let you introduce the panel and we can get started. Thank you.
I know we're running behind a little bit, so we're going to be crisp and snappy with our panel. And I think we're a nice segue from the last panel too, for those who listened in. Collaboration and partnerships are a defining feature of the FinTech ecosystem. And Xero itself actually solve small business pain points through the Xero platform. So we're talking here about partnerships and collaboration, and we've got the right people to do that with these companies. I'm joined by Paul McCann, who's Xero's head of credit integration, Oriana Tassari, who's head of partnerships at Stripe, and Patrick Rossi, who's also head of partnerships at Waddle. So my name is Catherine Lyle. I sit on several boards, including FinTech Australia. I'm a partner in a venture capital firm. We invest in early stage FinTech, and most of the boards I start on are portfolio companies or ones I've invested in. I also live in a very small coastal town, which we've been able to do post-COVID, and am on the board of the local business chamber. And I've seen in real time the impact this recent crisis has had on small businesses, and actually the effect that you guys as a partnership can have on those businesses in navigating that. So A lot of challenges for everybody. So I'm just going to start with you, Paul. Xero's like a homegrown New Zealand success story that's gone global. Could you just start by talking about Xero's actual financial services strategy?
Yes. Well, apologies all. Good morning. Thanks, Catherine. Great to be here with all of you. 16 years old today. Xero obviously started in New Zealand in Wellington, listed on the Australian Stock Exchange. We're now pushing into North America, Canada, South Africa, London. We've just made an acquisition of Waddle. Pat will talk about that very shortly, and more acquisitions planned, etc. So we're looking globally now about the adjacencies for small business and how we can use a small business platform to really bring insights to small businesses at the point they need it. And so we're developing both machine learning, AI technology across the data lake to almost actually bring all the insights at the time a small business needs them. So lots happening at a strategic level. I run our credit integration team globally, and I sit across our data lake. So 16 years old, you can imagine every single journal entry, every single bank feed, every single interaction a client has ever had with Xero is the data that we sit on. And so we're now starting to interrogate that data with the view of helping small business. Small business is probably at the beating heart of every Xero globally, and we're really trying to solve cash flow problems for them. I think the pandemic has probably really crystallised in our minds just how bad cash flow is for small businesses in Australia. You know, almost 90% of small businesses have a month every year where they're cash flow negative, and almost 4 months of that year for small business is negative. And so it's very timely that the previous panel was talking about embedded finance, which is highly topical, but it's about how do we actually see that insight, use embedded finance as an insight to help small businesses thrive.
Fantastic. That was very crisp, Paul. Thanks very much. And a lot going on there, right? And I know you probably touch on some of the research later on. So let's focus on the actual collaboration side now. So Pat Waddle, that's a great story too, right? Now founded in 2015, now part of the Xero story. Could you talk about the synergies between the businesses and how they?
Yeah, for sure. So I'm very excited to be here. Very keen to share a little bit more about Waddle and what we do and how we're working with Xero post-acquisition. But to start with, I might just talk a little about Waddle's mission. And we really, at the heart of Waddle, we are trying to get more capital into the hands of businesses. And we do this in a couple of different ways. Firstly, we partner with banks and lenders, FinTechs globally to help power their product, essentially. So we work with the likes of CBA in Australia, NatWest in the UK. And essentially, it's the easiest way to explain it. It's their brand, it's their capital, it's their credit policy. It's just our tech under the hood, making it all work for them. So for the banks and lenders that we work with, there's obviously a great opportunity to, tap into real-time data that we've got a lot of experience using, but we can also get them into market really quickly in a matter of weeks, in all reality. The second way in which we like to get capital into the hands of small business, Waddle started as a direct lender in Australia. We quickly learnt that our tech's pretty awesome, and we want to license that out. But we still continue to lend in Australia today to businesses, and we really use that as an opportunity to drive a lot of innovation in the segment. So looking at new ways to solve customer pain points, make our operations more efficient or lower credit risk, and then ultimately our desire is that we can offer those product enhancements to our banks and lenders globally so that they benefit from the innovation that we're trying to push in the category. And I'll get into a little bit of that later. Coming back to your sort of original question around the synergy between Xero and Waddle, obviously sort of 2-3 years ago, Xero did a scan of the market to look at how they could solve that pain point of cash flow. There's a couple of different ways they can do that, and working capital is certainly one of those. So they did a scan of the market and identified a Waddle as a really beautiful fit for the Xero organisation. And there's probably 3 reasons for that. The first one is there is a great alignment between the purposes of the organisation. So I think the Xero mission, now I've got to get this right, Paul, otherwise I'll be in trouble, is it's making the lives of people in small business better. And so clearly Paul sort of articulated some of the stats around the cash flow crunches and the strain that they can put on businesses. Waddle, and our partners can actually help solve that by unlocking the value in their invoices. The second, great fit between Waddle and Xero is Waddle's been using the Xero APIs for a number of years. Back, I think 2015, we were one of the first to start tapping into that data. So, being able to use the rich data that's stored within Xero to make credit decisions can make that customer experience really, really easy for a Xero customer to be able to get some finance. And thirdly, there's obviously a great geographic synergy. Everyone probably knows the size of Xero and the scale. I think millions of customers globally, but the key regions still include Australia, New Zealand, and the UK, which are the regions in which Waddle operates. And to give you a bit of insight around the opportunity, I think in FY22 there was 1.3 trillion New Zealand dollars of invoices raised via the Xero platform. So Waddle and our partners, we look at the value of those invoices, and we excited by the opportunity to how we could help customers unlock the funds that are stored in them to turn it into cash, when they need it, so that they can get through those cash flow crunches.
Brilliant, thanks. And I want to come back on that credit risk piece later on for both of you as well, but bring Oriana into it, because it's partnership, and certainly on nearly every FinTech board I'm on, the Xero Stripe partnership goes hand in hand for most businesses. So it's great to see that there's great opportunities for founders to grow their business using these type of partnerships, and especially around cash flow, etc. But can you describe how it actually works from a Stripe perspective? Because I know you do more than just this.
Yeah, absolutely. So the Stripe Xero partnership is a personal favourite of mine because it's high impact, and we're both extremely aligned around our commitment to serve small businesses, not just locally, but globally. So Stripe is a financial infrastructure platform for businesses of all sizes, and we build software tools to help ambitious companies like Xero really grow their revenue and transform their business. The partnership between Stripe and Xero is long-standing, and it's definitely evolved over time. So it's evolved from initially facilitating billings to embedded finance, and today we partner with Xero for invoice card payments in all markets in which Xero operates. But the partnership started and really centered around a shared goal to help small businesses get paid faster. So through the Stripe Xero partnership, Xero users can offer their customers an option to pay now by a credit card or debit card, or also a mobile wallet. And what we're effectively delivering is a seamless, optimized payment experience with simple and convenient ways to pay. And that results in customers being able to get paid globally, get paid faster, up to 14 to 15 days sooner in some cases. And also they're able to streamline recurring payments. So I think the really cool thing about the partnership is that the Xero users actually get access to the same tech that we make available across our client base to big enterprise users, heavyweights like Amazon. Stripe and Xero both have a history of being really tech first, and we both have very flexible APIs. And so it's been really exciting building together to improve the accounting and payment experience for small businesses in Australia, New Zealand, and globally, and really to help increase their cash flow and boost conversion.
Yeah, I might just pick up on the sort of the API point and the embedded finance point there. Obviously, the ability to transfer data between two platforms actually can make it easier for the customer to be able to transact where they want. So Waddle and Xero are doing something similar and starting to experiment with embedded finance and look at the ways that we can allow a Xero customer to be able to get a quote within Xero and apply for that financial product, a lending product within the Xero, making it really easy. And I think Jacob in the last session spoke about how he saw that as a great opportunity to unlock the receivables. And that's essentially, at the moment what we're trying to do, trying to give the customer the option of, hopefully they can get their invoices paid first with Stripe. If not, and they've still got those invoices there, how can they unlock the value with them? By using Waddle in Australia, it is. In the UK, it is. NatWest is a partner of Waddle and Xero working together, and I know Xero's working with other lenders in the UK to try and take that pain point away from a customer having to go and try and find finance and making it really easy for them to do it in the environment that they want.
Yeah, it's really important. The access to capital is so important for small businesses, whether you're raising capital, which we've got challenges around that right now, or trying to operate a small business. So, Paul, might come back to you because you talked about the finance API that supports lenders during this time. Can you just expand on that for us, please?
Yeah, thanks, Gaston. So we've got two APIs which our team looks after on an open platform. That's the accounting API and the finance API. So the accounting API is everything from basic journal data right through to credit notes and invoices. And the finance API was launched last year, and our team actually built that in collaboration with global lenders. And the intent of that outflow API is to actually surface financial information to a lender to enable them to actually approve a loan. Sometimes that used to take weeks, but with the data in a real-time sense, the API enables a credit decision to be made in minutes. And so I'm working now, as is our team, with about 30 lenders globally about how they can use that API for decision making and transform their credit engine to ingest Xero data.
And you both touched on this credit risk piece, so I'd be keen to, if you can dig in a bit more about how you actually lower that credit risk piece. And certainly with my Wiser hat on, I'm very interested.
Yeah, so I think what we saw through the pandemic was that small, medium enterprises globally found it really hard to access capital. But the root cause was, in fact, that they were relying on accounting data to provide a bank or a non-bank with financial information to approve the deal. And so the pinch point was really the accountants producing financial statements, not access to capital. And so when we actually understood that, we thought, well, how can we actually double jump that and provide real-time data through an API to a lender globally to actually grant access to capital in a real-time way. And from a credit risk perspective, it's about how do we surface financial information as it's happening dynamically rather than looking at accrual accounting data, which is historic. So bringing that forward enables an SME to access capital quicker.
Yeah, so I think, certainly we're very fortunate being an invoice finance here in Waddle and the partners that we work with that there's so much rich data stored in the accounting platform that, we are very focused on the health of the asset, and the information stored within Xero is very, very, very detailed around invoices, and that's the asset that we look at to understand credit risk. So by us being able to tap into that data and have been able to do that for a long time has made it a lot easier for us to be able to actually underwrite on the strength of the business, not necessarily on the security of a property that the business owner might have.
So data. Let's just talk about that for a little bit, right? Because the phenomenal amounts of data we're all gathering these days, what we do with that, how that supports the businesses right now. Also looking forward a bit. What more can we do with that? So, and how we're ensuring the quality of that. You're getting that golden copy, if you like. Who owns it? Where it's used. So, Pat, I might start with you because digitisation of the economy is really impacting this.
Yeah, for sure. So in terms of, I think, digitisation of the economy, it's certainly really being driven by quality data and the ability to be able to share that data between partners or platforms can really create better experiences. Something we're really proud of at Waddle is that we think we were one of the first to essentially fund off what we call the single ledger, which is by having a real-time connection into really great quality data that sits within the Xero platform. We could understand the actual position of the business. Most other invoice financing products get a snapshot of the client from 2 weeks ago, and then they wait 3 weeks or another 4 weeks or whatever it is and get another snapshot of what the client is up to. What that means is there's a bunch of manual work. The credit risk from the bank side or from the lender's side, they don't have a full picture. And ultimately, what that means for the customer, and still today, if you go to some of the largest invoice financiers in Australia, they won't serve you unless you want to borrow $500,000. Whereas you come to Waddle, and we can give you a loan for 10 grand because we've taken away a lot of that manual process, and we can really understand the customer's actual position to be able to make those decisions. And it really is based off that quality data. In terms of, I'm probably talking quite a lot, but in terms of what we see coming forward, I know there'll be probably a bunch of talk about open banking, but we certainly see invoicing as something that's really interesting to Waddle. Certainly there's great data within the Xero accounting platform around invoices, but we lose sight of it sort of once it loses that platform, once it loses the Xero platform. So hopefully e-invoicing will be able to close that gap, and we'll be able to see that, hey, this invoice was sent from the Xero platform or from excuse me, a customer's file. It was received by a customer of theirs and hopefully accepted. And that just gives, the lender a lot more confidence that that isn't a disputed invoice or a fraudulent invoice, and they can lend against that with a lot more confidence.
And that confidence and trust is really what this is all about, right? Oriana, do you want to talk about that?
Yeah, I think a big part of data quality is also relevance. So presenting the right data at the right time in the right context to enable effective decision making. And there are a couple of examples that come to mind. So starting with the Xero Stripe partnership, there's actually a new capability, the Xero Stripe app in the Stripe app marketplace. It's a bit of a tongue twister, but what that is effectively is pulling or automating a data feed from Xero into Stripe so that users of both Stripe and Xero, if they're already in the Stripe context, can see their bank account balances, their cash position, their bills and invoices without having to switch between apps. And the same is true the other way around. So Stripe has a feed into Xero so that every time a payment is made with Stripe, either via the invoice product or on an e-commerce store, that appears as a separate line item in Xero, and it facilitates easy reconciliation, and the user has a holistic view of their position. So I think that's really important in terms of data quality, presenting data in the right context, and that is convenient for the client. But the other element that comes to mind is protection, fraud protection, which is a big part of Stripe's business. So actually, if for any given card payment processed on Stripe, there's an 86% chance that we've already seen it. We process payments in over 190 countries around the world, all different types of industries and business models. And so we have machine learned algorithms that are powered by the millions of businesses that we serve, the billions of dollars that they process every year. And that allows us to serve up really data-rich insights to our clients so that they can make really good decisions and protect and prevent fraud and ultimately get better client outcomes.
Fantastic. Do you want to add to that?
Yeah, I'll put my patriotic Australian hat on. There's probably 2.5 million small businesses in Australia. Xero's currently got about 1.4 million subscribers in the small business space, so a very high portion. This year, unlike any, has been the most challenging that we've seen. Ukraine war, supply side issues, rising global interest rates, and that's creating a hell of a lot of psychological anxiety, and we're seeing that in businesses. And so Xero wants to do everything it can to actually take those pain points away that we can to enable small business to thrive. Why? Because when that happens, Australia thrives.
So let's have a look at part of the tech, right? So Pat, maybe you can talk about Waddle Flex, because that's actually one of the items it's solving for this.
Yeah, for sure. So I think, excuse me, it's important to note that technology really needs to drive product enhancements. So you don't want to build tech just for tech's sake, essentially. So what we've been doing, at Waddle, we've identified a customer pain point that exists with invoice financing, and that is that if you sign up for a new invoice financing facility, you're asking your customers to pay into a new bank account traditionally. So you'll have to email all of your debtors. You might have 10, 50, 100 debtors and say, hey, I've got a new bank account. And the reason that is so that typically the invoice financing would control the funds. We don't like that process. We want to avoid that pain point for customers. So we've recently launched a new product called Waddle Flex. Essentially, we use our analytics to detect payments as they come into the bank account and pull the money out of the trading account. So the customer goes on using their normal trading account, debtor's just paying to that, but we still get the repayment as if it happens, directly into a trust account. We've also been working with a partner of ours, a banking partner of ours, to help them launch a new product that addresses that problem in a different way. I think it's pretty cool. Essentially, they are taking all of our risk controls, which work out how much a lender is happy to lend against the assets, being the invoices, and they're attaching that to a transaction account. So it essentially creates an overdraft with a flexible limit. So no need to update any bank details with your customers when you sign up for invoice financing. And then also, you don't even need to do a drawdown. If you don't have the money to make your next payroll, you just make the payment, your account goes into negative, you've got the invoices there to be able to support it. So it's a nice, really easy and flexible product for the customer. For the bank, they get additional risk controls because they can actually have a live feed in understanding of the invoices and the assets which they're lending against.
Yeah, and I think just like in trading in markets, that real-time data is all important in managing that. Look, Stripe, you mentioned before, across all these countries globally. Just let's take it back a bit on the macro perspective, because we've had a lot of challenges that Paul talked about early on, and especially with wars, supply-driven inflation, etc. From Stripe's perspective, how's the uncertainty in the global economy impacting business?
Yeah. To be honest with you, our clients never waste a good crisis. We're continuing to see them invest in the internet economy and really find success in the current macroeconomic conditions. And we think that is because the long-term fundamentals of the internet economy and Stripe as a business remain unchanged. If we think about the volume of consumer spending globally at the moment, I think less than 12% occurs online today. So that's a lot of runway, a lot of room to grow. But I think the markets that are going to recover best are really ones that are open to new technology and that really have a focus on transcending international borders and supporting their business community to engage in global commerce. And Stripe's definitely here for that journey where, it's what we do. So I think we're really well positioned to continue to partner with organisations like Xero to really innovate and provide benefits to consumers and users throughout the economic cycle.
So we might, looking at this genuine partnership, we might kind of start to wrap up now. Has anyone got a burning question? I know we don't get much chance. We've got only a few minutes left, but if I don't see a hand up, we'll go straight on. So, Paul, Xero's vision, very strong right from the start. It's revolutionised the way small businesses operate, right? And the partnerships here, the way we're doing things. We'll start with Pat, and then I want you to have the last word on this. So if you've got any last things you'd like to say about what's happening here, and then Oriana, and then finish the call.
Yeah, I think certainly from our point of view, it's been great being part of the Xero family as part of an acquisition. There's a huge opportunity there just to, solve some of the customer problems that, actually really do affect people in small business. And so we're keen to be part of that. With the economic uncertainty coming, we're still really confident that we'll be able to serve them. Invoice financing has typically been a product that performs well in uncertain times because we look at the underlying assets. So, yeah, we're definitely keen to continue to work, with Xero to be able to make the lives of the small businesses easier.
Are really amplifiers of entrepreneurship. So I expect and am excited to see where the Xero and Stripe partnership goes, and I think we'll continue to innovate together and do some really exciting things.
Yeah, I completely agree. It's all about the amplification effect of the ecosystem of the partnerships that we have. We do have a mission to create a single platform that small business spend their lives in the Xero platform. That's a mission and a vision and very idealistic. I think in the runway, though, it's about the partnerships and actually solving small business problems. Why? That makes the global economy better.
Well, you're off to a good start. That tricky, sticky stuff that all small businesses have to work on, it's a great path. Look, thank you, everybody, for listening. Please thank our panel, and everyone will be around afterwards for questions.
Okay, perfect. Yeah. I might ask our next panel to come and sit up, and we'll get started pretty quickly.
I'll talk quick.
I know, yeah, perfect. All right, we'll get started with our next panel. Our next panel is all about CeFi versus DeFi and the integration with FinTech. Sorry, if I could just ask everyone to be quiet so we can introduce our next panel. Thank you. So our next panel is all about CeFi versus DeFi and the integration with FinTech. Joining us for this next panel is Jonathan Miller, the Managing Director for Australia at Kraken, Caroline Bowler, CEO of BTC Markets, Malachi Kerwan from Propine, and moderating the panel is Steve Vellis from Blockchain APAC. Welcome to our next panel.
Thank you, everybody. Exciting day, lots of familiar faces. The reality here is there's a lot of interest in this space at the moment. You can't hear me, Greg? It'll come. I'm sure we'll crank it up. It's great to have you all in the room today. Before we begin, I just want to acknowledge the traditional owners of the land and have our respects paid to their leaders, past, present, and emerging. I will introduce myself only briefly. I talk a lot to a lot of people. I am the boring face of blockchain in this country, or have been to this point in time, and now will be hopefully less so. Introduce you to three very important participants in this ecosystem, locally and regionally. I'll get them to introduce themselves first, and once that's done, I'll frame the conversation that is CeFi and DeFi, and some elements which we probably need to give consideration to. So I'll let you start, Caroline.
Thanks, Steve. Hi, everybody. Caroline Bowler, CEO at BTC Markets, board member at Blockchain Australia, former lifer in TradFi, moved into blockchain in about 2014, 2015, and joined BTC Markets a couple of years ago, just in time for the boom. I'll pass it over to you, Jono.
Thanks, Jonathan. Jono Miller from Kraken, Australia. We're a global crypto exchange, kind of transitioning from being a very neutral marketplace to something a bit more opinionated. We can talk a bit about that, and plugging into DeFi. And yeah, it's really great to be here. Thanks for being in the room with us.
Hey everyone, I'm Malachi Kerwan. So I work for Propine Technologies. We're a digital asset custodian in Singapore. My background is traditional banking. I'm relatively new in this space, so I'm just dipping my feet in the water the past year or so. My previous background is pretty much all at State Street, 13, 14 years.
Great. So part of the context for us here, we've got on the board there CeFi versus DeFi. There's a missing component in my mind here, and the reality is TradFi is a conversation that comes before CeFi and DeFi. Almost all the conversations we have reflected, I think, in the turnout today and the people who are in the room. Almost everything comes back to regulation. We will give no advice about regulation. Safe to say that everyone's life is impacted by regulation, and that's the primary consideration for all of the businesses that operate in the space. What it means for them, the certainty they have or don't have, and what opportunities present or don't present in the jurisdiction like Australia with respect to that. So, Caroline, I'll start the conversation with you in that regard. Australian business, Australian customers only, my understanding. Can you speak to what CeFi in a B2C markets world looks like? What's the business look like? What's the business profile look like?
Yeah, great. Thank you. So we've started in 2013. We, as you mentioned, we only onboard Australian clients. So we've got a couple 100,000 Aussie-only client base. And that was originally decided, the two founders both come from a technology background. One's a developer and the other one's in IT. And so they are looking originally to automate the heck out of everything. And at the time when they first founded the company, the only automated process that they could find for KYC was for Australian-only clients. So they thought, okay, we'll stick with this. And actually has become part of the company's ethos as we've grown. The reason why that's been beneficial, the reason why staying in just that one market, A, gives us depth in this market, but also means then when we have those regulatory conversations, we can really talk with some expertise around what's happening in this space. Now, so obviously coming from traditional finance, one of the reasons why I got hired into the role was because I had all that experience working within regulated environments. And there was a clear understanding that even back in 2018, when I first started the conversation with B2C markets, it was obvious that regulation was inevitably going to have to come into our space. And I still firmly believe in that. And I think very much anyone who's kind of heard me talk will verify that that's something, a subject I talk about a lot. But for centralized exchanges, this is a really important piece because the single greatest, most important element, I think, is trust when it comes to financial services. Now, we know that existing financial services operate in an environment where regulation has come in to help generate that degree of trust, royal commissions notwithstanding. There's an absence of that then for Australian investors coming into cryptocurrency. And so we try to mirror as much of those trusted behaviors as possible while operating within essentially a trustless environment.
Do you consider yourself part of the CeFi part of this ecosystem?
Yeah, I think that's fair enough to say. I mean, certainly from our origin story, I mean, we've certainly adopted a lot of those kind of centralized characteristics. We've got one order book, so we're not a broker, we're a full peer-to-peer exchange. All the trading activity is centralized to just with ourselves. So we do, mirror a lot of those CeFi, but that's not to say that we're not interested in decentralized finance and what's happening in DeFi.
Do you think other people view you as CeFi, or do they view you as part of this nefarious bad actor, too different from our business?
Oh, I think it depends on who you're asking. I think anyone who knows the space well in Australia knows that B2C markets kind of has always been the designated driver, as I like to refer to us. We're the designated driver of Australian crypto. We're sober, but behind the wheel, but we're going in the same direction as you. We also hold an AFSL via our sister company. So, we're very proud of that, the fact we put ourselves through that process. So we try to, as I say, mirror and adopt some of those best behaviors. Where it differs from DeFi, that's not to say that we're not passionate about decentralized finance. And in fact, I think Australia in particular has got a fantastic DeFi ecosystem. There's an awful lot of innovation, an awful really smart minds here locally that are working on some of those projects. We're very excited to talk to those guys about it. But I think that decentralized finance is where centralized finance was maybe 4 years ago.
And I'll set the scene. The reason I'm sort of laying the foundation there is people conflate these things. They're intermingled when we talk about them. We talk about what roadmap looks like. Jono will zoom out in a Kraken global business, scaling globally. Do you see the local ecosystem and the international ecosystem differently? How do you view sort of the interface that is what you do in Australia versus what the country is doing? And what's the Kraken approach to the world? Because I think most people fail to recognise how global, even after so many years, they fail to recognise how globally minded you need to be for a business like Kraken.
Yeah, happy to talk to that. Thanks. I think Kraken's an interesting story. I mean, founded 2011, has about 10 million clients globally. In the kind of early days of crypto, Kraken was one of the, one of the exchanges that people look to. If you remember, a big kind of catastrophic failure of a platform like Mt. Gox, and the intention was to create was to professionalize. That was one of the original intentions, was to professionalize the marketplaces, because the marketplaces were, cottage industry, I would say, is the way you would describe the marketplaces at that time. Since then, I think, so the inception being, as I mentioned at the top of this panel, Kraken's intention was to be a very neutral marketplace. So a venue where people could come and orders would be matched. And I think that's a business model that's really important to any ecosystem, especially digital assets where liquidity is important. So yeah, so Kraken's a site of kind of global liquidity on, especially in euro and also US dollars, some of the deepest and most liquid markets there. As the ecosystem has evolved and the kind of global footprint, to begin with, perhaps kind of a monolithic, homogenous product that's delivered globally, from Silicon Valley, US based business, transitioning to more regionalized, more geography specific offerings. And that's been both, I think, a kind of proactive and a reactive transition, but also at the product level, and the reactive, regulatorily speaking, Kraken holds licenses has a banking license in the US, markets license in Japan, FCA registered in the UK, holds an MTF license for a derivatives platform in the UK. The list goes on. This is, part of you're talking about the kind of evolving state of play. So yeah, that's been one driver. The other driver has been, intention to kind of connect more locally with individuals. But from the product suite point of view, there's also been a transition. I think that's because, DeFi is a way of describing the bleeding edge of crypto. I think crypto in general, blockchain, these words, you can kind of split. And if we're thinking about how we define these two, just to level set for everyone, I think, CeFi is where you have a custodial relationship to the underlying. So, in the case of Kraken, when you trade on Kraken and BTC markets, you deposit your crypto into our wallets, and we then match orders and with an off-chain matching, as old school. So as the innovation has occurred in DeFi over the years, Kraken's business has kind of changed over the years, and from a global point of view, different jurisdictions view those activities very differently. So that's one consideration, is that in this kind of time of flux. But fundamentally, there's a kind of thematic which is bridging into innovation, and I think that's true for businesses in CeFi. It's dealing with the kind of very innovative. You're talking about programmable, permissionless, distributed, peer-to-peer money that people are building really interesting things on top of, and then you need somehow to interact with that. And businesses, CeFi businesses like Kraken are kind of shifting from being a purely neutral marketplace to being an integrator, a portal, a bridge into this other world. So that's something that has to be undertaken in different ways in different markets because of that regulatory layer. We can talk about that more if you want to later.
John, do you think people have a sense, even after quite a number of years, how complicated the conversations you have with respect to this? Most people think they've got enough on their plate and they talk about things in a localized way. Traditional finance businesses will talk, it'll be acronym bingo as well. They'll talk about the licenses. Do you think people get how complicated it is to give consideration to the issues you face at a business like Kraken?
Yeah, I mean, I think people have described it as being similar. The state of the industry being similar to, I guess, foreign exchange in the 90s, or a complete new market has evolved. But I think the thing that's interesting about DeFi is that we're not just talking about kind of the speculative behaviour that you see on exchanges, which is the interchange between currencies, be they between fiat, government issued currencies and crypto, or between different cryptocurrencies, is an important part of the ecosystem. But what we're seeing is, on the kind of adoption curve, we're seeing, we're kind of coming out of that speculative part of the curve, and we're moving into deployment. We're seeing use cases and blockchain being used in the background. I think we could talk about some of those today. Maybe they're interesting ones to talk about. Stable coins being one. I think a really good example of like a use case. People don't think of them like that, but they are. They're using blockchain as infrastructure, completely separate, divorced from traditional regulated payments infrastructure. You've got NFTs, all these kind of things. So yeah, absolutely, it's extreme, the amount of innovation and also flux, and therefore, I don't think there's a comparable kind of regulatory experience for other businesses at the moment.
And make the point as well, in all the rooms that we're in all the time, the domain is largely absent, right? Even after all this time, there's enormous complexity, and people fail to recognise how many things they should give consideration to. Malachy, talk to us a little bit about Singapore. I mean, Singapore is an incredibly important market for Australia. We look to what is a fast-paced. They always seem to be moving faster than we are. I think in some respects they have to. The nature of the country is that it needs to be seen to be innovating faster, that we have a little bit more time. Tell me about Singapore, and then tell me about your business there, because yours is a business that built from the ground up is regulated, right? I mean, the premise of the business is you start in a regulated environment.
Yeah, correct, Steve. So I think just some of the information that Caroline shared there, I think one word kind of stood out for us, and that's trust. So very early, the co-founders at Propine kind of decided, look, we want to go down the regulated route. So they, at that time, obviously there was no license specific for digital custody in Singapore. So they spoke to MAS. They had a good relationship from MAS from prior, work experience. They sat down with them, and MES were very engaging from the outset. They took them into the sandbox, spent 18 months in the sandbox, and then just as we exited the sandbox, MES give us a CMS license to provide custodial services on the assumption that would be digital assets. So I think it shows that MES are willing to work with these players that want regulation, that want to do things the right way. At the moment in Singapore, I think the messages coming in from MAS are a little bit mixed, in that they want to regulate, they want to move things forward. You see that it's going to be a hub for cryptocurrency, but at the same time, there's a lot of we want to protect retail investors. We're not allowed to market directly to retail investors, etc. Thankfully for Propine, we focus more on the institutional side. Hence the reason why we did go down the regulated route originally, because obviously when you talk to the likes of our customers, which would be asset managers, high net worth individuals, that you will not get in the door unless you're regulated, pretty much. So that was probably the main driver of the decision to go down the regulated route originally.
Do people trust the business? I mean, this is one of the challenges. The reason I framed it from a TradFi and DeFi, which we'll come to in a second, is you spend a lot of time dealing with TradFi businesses, right? We spend a lot of time talking to regulators in the face of what the narratives might be, which is this is a space that seeks to do its own thing, and it's trying to build a new frontier, and we don't need anyone. Disproportionately, you're spending your time having those conversations. How do you find that interface with traditional finance? And your background is traditional finance. How do you find that? Do they get it? Are they getting it? What's that Singapore experience look like?
Yeah, I think they are getting it. I think it's just going to take time, obviously. I think the names are out there longer now. I think people will start to build trust. So the likes of the Krakens, the BTC, they've been around for quite some time. So people will start to trust the names. They'll start to kind of not be afraid to kind of move into that space. But obviously the regulation is the key part. That needs to come first, I think.
Steve, sorry, I might just interject on this one. Just to go back to that point around trust. They started in traditional finance and then moved into financial technology in Singapore. So big ups to the SFA who are in the room, and we spoke about this before. And what I found at those early days of SFA, of working with fintechs, was the creation of trust. That the fintechs of Singapore and Australia had to generate trust with the larger institutions and with regulators. And I think to a degree, we're having similar conversations now within CeFi world, not DeFi, within the CeFi world, of having those conversations similar to what the fintech industry had to do 10 years ago. We're now on that same journey. So there's a very clear path for us all to follow. And I think following it, as you say, focusing on trust, focusing on regulation, amplifying the good players, such as we have on the panel here today, and others within our industry, just adds to all of that. But you can definitely see the mirrors, you can definitely see the similarities.
So having established we're all very boring in the day-to-day life, dealing with traditional finance requirements and regulatory environments, Jono, we don't need any of this, right? DeFi will save the world. You should get out of the way. I'm too old to be talking about this subject matter, and we should bring forward the degens and build a better system. That's pretty much the thesis.
I think that the site of innovation at the moment, in my view, is certainly in DeFi, but businesses that have more centralized models can imbibe and take on board, and I think Kraken does a really good job of this, bring in the good parts of that and provide access to some of the interesting things that are happening there, but bring in the philosophy. And I think more generally, crypto, crypto is DeFi, right? If you just want to talk, Bitcoin is DeFi. So, if you take some of the really powerful traits and philosophy from those, from the communities, not just the technology, but the communities as well, and you bring them into your organization, then you're kind of getting the best, I think, out of it. And so some of the things that I think Kraken do kind of reflects that. An example is that we have a we use Merkle tree. So we use Bitcoin technology to do our audits. So you can, as a user, plug in your identifier on a third-party auditor website and have a provable record of the reserves, as in that the deposit you have with us exists, validated by a third party independently with no, identifying information leaked. So, this is using DeFi technology in a way to create better version of a centralized or a business. Let's call it a business, as a CeFi business. I think there's lots to be said for leveraging DeFi. Essentially every time you touch some crypto in your organization, you're therefore touching DeFi. The trick is to work out what's good and what's not good. What's fluff and what's not fluff.
One of the challenges I think identified in the way you use the language, Jono, if you say, and I agree with you, if you say crypto is DeFi and Bitcoin is DeFi, half the room then evacuates. Right? People shit themselves immediately. You go, if that's DeFi, this is why we don't want to be here. You then say, and this happens all the time for us, people say, don't mention crypto assets, don't mention cryptocurrencies, don't mention any of these things. Tell people it's just an investment class and it's digital gold, and we have that narrative. How do you address that challenge? Because it really is the same conversation, subject to the level of domain experience. And your view, a more mature view that says, yeah, it is, we can call it something else. Are you finding yourself having to have the conversations in that way? So do you deliberately think this is old men in suits talking about traditional finance, or do you say these people get it because they understand the generational shift?
I think it's changed a huge amount. So when I first started, mucking about in this space, it was, as I said before, a cottage industry, really. There was a couple of exchanges, BTC Markets being one of the first, Independent Reserve, another one in Australia. Mt. Gox was I think seeing 90% of all the trades globally, which is an exchange based in Japan, which fell over. And the repercussions of that, I think, still permeate in Japan. If you're a Japanese person trying to engage with crypto, it's very hard. You need to send all your money offshore, basically. We hold a markets license in Japan, but the regulator there tells us what we can and can't list. It's really restrictive, and there's not as much choice for the end user. So yeah, but the environment has changed. I mean, you just have to look at major banks making use of blockchain's alternative financial infrastructure, and I think people get it that there's a really interesting innovation opportunity here if you use the technology, and you just have to kind of, as you say, for kind of unwind the apprehensions around people's original kind of knee-jerk reaction to, say, Bitcoin, and people understand that this is that DeFi is a very powerful potential tool.
Caroline, is a functional question for the business. Do your customers care? Do they care at all about this? You've built a business that is leveraging these things, that has a roadmap, which, by the way, people don't realize how readily disrupted all the businesses that are being built in the space can and will be. But do your customers care? Do they care what's behind it generally? What's that sort of profile of the people you're servicing?
Yeah, I think that right now, that anyone who's in cryptocurrency right now is still such an early adopter, that they're fascinated and excited about the same things that we're all fascinated and excited about in this particular sector. But exactly as you're saying about the adoption curve, that's soon to be diluted, and we're soon going to move into an infrastructure, or we're going to move into an industry rather, where people will have expectations around what they're engaging with. I think we can all agree DeFi is still so new that the infrastructure around DeFi needs a bit of work. The UI UX, the user experience needs some help. But what we are seeing, and if you take it back to the integration with FinTech, what we're seeing at BTC Markets with our partners is that those partners are wanting to come in and engage with cryptocurrency. I look at MasterCard, I know they're in the room here today. We're a strategic partner with MasterCard. We're also working with Self-Wealth with their crypto listings. So we're going out into the FinTech community, and the FinTech community is coming into crypto. So those kind of worlds are colliding in a most amiable way, based on the premise that you're working with regulated businesses such as ourselves up here that have adopted those degrees of standards. There's a lot of hunger. There's a lot of thirst. People want to come into cryptocurrency. We know from the ASIC study only just earlier on this month, people are interested and they're coming in. But there is also, I suppose, an expectation that a lot of this work has already been done. And we need to get there from a regulatory point of view in particular.
So, Maliki, for me, it's interesting that your business talk to what your customers want, because it's actually the same thing as those who are in DeFi say they want, but they should be left alone to take care of these elements of their own interests. Keys, security, self-custody. Your business is the opposite, right? So what are you providing that says in a regulated environment for sophisticated participants in the space, what's the product offer? And is the antithesis of that the DeFi thing that says not my keys, not my insert crypto asset here?
Yeah, so I think what we offer is obviously the main selling point is the fact that we're a regulated custodian. So what we're seeing is a lot of asset managers, high net worth individuals, family offices are starting to dip their feet into crypto. So they're coming to us because obviously there's a certain amount of due diligence they need to do before they'll obviously engage custodians. So we could go through that whole process. But in order for us to get to that point, it's the fact that we've got the CMS license gets us in the door. So that's on the crypto side. But the main part of our business right now, to be honest with you, is more on the digital asset side. So the tokenization of real estate funds, the tokenization of any type of asset, to be honest with you. So we've got people coming to us pretty much every day looking to tokenize, and that's probably the bigger trend that we're seeing now. Obviously, not connected to DeFi or CeFi, but that's probably the main focus on the ProPine side right now. We're seeing a lot of that pop up in Singapore. Exchanges popping up for trading of the tokenization of these assets. So yeah, that's kind of where we're at. But yeah, the main selling point is the fact that we've got the CMS license, and the asset managers, the high net worth individuals, the family offices. These guys are coming to us. That's what they're looking for. They're looking for that comfort because they've got that previously. They are tech savvy. They know crypto, and that's given by the questions they're asking us. They wouldn't be asking us those questions during the due diligence process if they didn't understand what they were getting into.
Jono, is part of the challenge here for us that when people think about DeFi and they say, well, Celsius is a good example, except it really wasn't DeFi, right? And then they say, well, Luna is a good example of a stablecoin. It was an algorithmic stablecoin. It's exotic by anyone's estimations. People don't know what's on that side of the equation, do they? Or are you finding, again, there is a greater understanding of it? Just easy to point to it and say, see, we told you. There's a lot of money. People lost a lot of money. We have to protect you from it. And we're going to call it DeFi because it's an easier way to characterize it. And then people get a sense it's still part of this nefarious bad actor part of the ecosystem.
Look, I think that quite often the criticisms raised of crypto in general that it's speed running traditional finance, and they will end up at the same end point. I don't subscribe to that. I think that there's a huge amount of kind of greenfield innovation occurring that's that is ultimately additive and expansive. So yeah, in terms of the failures that we're seeing, definitely you can point to particular problems, and in my view, a lot of those problems are balance sheet. In the cases that you raised, just then balance sheet management problems. That's not a problem at the level of the technology at all. It's a problem at the level of the business model. So yeah, the cool thing is that when you have open source, permissionless, programmable infrastructure for both money and assets, you can do cool stuff. And that's the part that we should be focusing on when it comes to DeFi, not the use cases for sure, not necessarily the business models that we're seeing today though, because a lot of the kind of really innovative stuff is being built and doesn't yet have mass market reach, but that is what's powerful about DeFi, and that's the part we should be talking about, and that's less scary as well because it's pure innovation. We're not talking about exotic business models.
And as far as what the perception and the reality, Jono, I mean, you talked about how many users there actually are, how big the market is. Like there is a sense that, in my mind, it's bigger than it is. We're talking tens of billions of dollars. We're not talking trillions of dollars in relation to it.
Yeah, I mean, the kind of assets under management or assets on chain metrics explode depending on the value of the underlying currency. So it's kind of hard to measure. The other metric you can look at is number of wallets. If you're talking about DeFi adoption, it's, well, what does DeFi adoption mean? It means that you're interacting using crypto wallets, which means you need to have a wallet. How many wallets are there? So the number of wallets in the system, that's all growing. But we're not talking in the millions of wallets. So it is really early in that respect in terms of people being on the metal, like interacting directly. And that's why I think businesses like Kraken and ours exist because they sit in between and provide that bridge and provide that portal and fundamentally a trusted way to interact with. So, a good example of that is staking. Proof of stake networks, they're all the rage. The Ethereum merge is coming, which means that the biggest, most used, open source computer, which is Ethereum, upon which a lot of these businesses are building, is going to swap to a new network where you become essentially, if you stake your coins, you become a validator. You become like say it's kind of like a member of Swift, right? You get a share of transaction rewards by validating these transactions. Anyone can do that. It's quite technical though, and you can F that up. You can lose your money. So people come to platforms that provide these services. We provide such a service. I think we have one of the biggest staking nodes in the market. I think third biggest staking node in the market for Ethereum globally. These things, this is where CeFi plays with DeFi and help kind of smooth the edges and also provide a trusted way of interacting.
For me, interesting. I think the future is very obvious to me for most brands. I was yesterday in a room with ANZ and they were talking about what they're looking to do with stablecoins or otherwise. When AJ, Visa, and all these other big brands that you recognise, businesses underestimate, in my mind, and this I'm curious to see how you see it, Caroline. They underestimate the value of brand sitting atop a democratized tech stack. The reality here is the tech will be available, permissionless in many respects, and the thing that will matter largely will be the interface. Is that the way you see the ecosystem? If you're crystal balling, that brands and trusted brands will sit atop a stack that you can take advantage of in a way that to this point in time you haven't been able to?
Yeah, and that sounds a lot like FinTech, doesn't it? One of the points I'd like to go back to is something you made earlier with regards to how the expectation of how people within traditional finance, the old men in suits, as you phrased it, and I actually don't think that's necessarily the reality anymore. I think that looking at the amount of, I know ourselves looking at the amount of people in financial services who trade crypto, we know for a fact that while the institutions may not be there, people within the businesses definitely are. And I think that's true when you look at conversations and with other organizations, government organizations as well. There's an increasing amount of engagement with it within and curiosity within traditional finance, at centralized exchanges and decentralized finance. But to your point about brands, I think that definitely stands. I think that probably goes back to the theme we keep coming to, which is around trust. Like, I trust ANZ. So I'm going to go into use them as a portal. And I think it's the same with what Kraken are looking to do. And it's similar to what B2C markets are looking to do in terms of creating that trusted place where people can just come in, engage with DeFi without needing to necessarily know it's this new scary world of decentralized finance. I just want to earn some tokens through staking.
I think sort of that's the wrap up for us. I think the important part for those in the room that don't know the space particularly well, and if you don't, take comfort that very few people do. This is one of the things that hasn't changed. People always say to me, you can expect a low level of knowledge. I said, tell me when I should expect a high level of knowledge. The space has moved too quickly for most people to keep up. But the summary for these sort of three conversations on stage is assets as you know them, security of assets, digital assets or otherwise. Maliki is a good example of what that looks like in a jurisdiction that is in Australia. With Jono and the business that is Kraken, they started early. They've had to be nimble to remain relevant, but they have this global view and they get this sort of interface backwards and forwards. And Caroline's building out a business in Australia that looks to be best in breed, that fundamentally caters for Australian customers. This is our point. These are the conversations that are lost for most people. Each one of these people should be of interest to each one of you in one way or another. And on that basis, I say thank you all for the time you've committed, and hopefully lots of people will ask you lots of questions.
Feel free to head out for some morning tea. We will get started on our next session in just a few minutes to make sure that we don't go over time for lunch.